You know, deep inside Bitcoin's code, there's an event that's programmed to run. It's on a recurring, totally unchangeable schedule. It arrives like clockwork, and when it does, it sends these massive ripples across the entire financial world. And look, this isn't some kind of bug, and it's not an update somebody pushes. It's a fundamental feature, a countdown that was literally embedded into the network from its very first day. It's called the halving. And if you want to understand Bitcoin, you have to understand this. So let's get into it. To really get what the halving is all about, you can't think of it as just some technical thing. No, it's an intentional economic shockwave, and it was put there by design, right from the very beginning. Okay, so here's the basic idea. Every time a new block of transactions gets added to the Bitcoin blockchain, the miner who did the work gets a reward in brand new Bitcoin. The halving is just a rule in the code that says every 4 years or so, that reward gets cut clean in half. So you might be asking, why on earth would they do that? Well, it's all about scarcity. Think about it. Regular money can be printed forever, but Bitcoin, it was designed with a hard cap. There will only ever be 21 million coins. The halving is what makes sure that new supply slows down over time, kind of like digital gold. All right, let's take a closer look at how this code of scarcity actually plays out for the miners, the people who are, securing the whole network and creating those new coins. And the reduction is, well, it's pretty drastic. When Bitcoin first started, miners were earning 50 BTC for every block. Then, after the 2012 halving, bam, down to 25. In 2016, it dropped to 12.5. In 2020, 6.25. And now, after the most recent halving in 2024, that reward was sliced again to just 3.125 Bitcoin. So this has a huge economic impact, right? All of a sudden, the rate at which new Bitcoin is being created gets slashed in half, literally overnight. And if demand for Bitcoin stays the same or even goes up, while the new supply is cut so sharply, well, you get what economists call a classic supply shock. Now, this isn't just a theory. We've actually been through this 3 times before. And when you look back at the data from those past cycles, it tells a really, really interesting story. If we look at the halvings in 2012, 2016, and 2020, you start to see a pretty clear pattern emerge. So the big question is, what happened to Bitcoin's price in the year right after each one of these supply shocks? After that first halving in 2012, the price of Bitcoin just went ballistic. In the next year, it saw a completely mind-bending increase of over 8,800%. Just wild. The second halving in 2016 wasn't quite that explosive, but it still put up a massive 285% gain in the year that followed. That's what led us into that famous 2017 bull run everyone remembers. And then, most recently, after the 2020 halving, the market saw another incredible surge of 548%. The pattern seems pretty clear, right? A halving happens, the new supply gets squeezed, and a major price rally tends to follow. So simple. History is just going to repeat itself, right? Well, maybe not. Because this time, there's a massive new player in the game, and it's completely changing the rules. All those previous cycles were mostly driven by everyday people, retail investors like you and me. This time, it's a whole different ballgame. The game has been changed forever by the arrival of spot Bitcoin ETFs, which basically opened the floodgates for huge amounts of money from big institutions. Let me try to put that into perspective for you. The daily demand for Bitcoin, just from these new ETFs, is as much as 5.5 times bigger than the entire new supply of Bitcoin being created each day. The supply is being cut in half, while demand from the biggest players on Wall Street is just surging like we've never seen before. So this all leads to the billion-dollar question that everybody is asking. With the halving now in the rearview mirror, what happens next? And frankly, the experts are totally divided. On one side, you've got analysts like Ryan Rasmussen from Bitwise. They're looking at that supply shock, they're seeing the relentless ETF demand, and they're arguing that it's all going to drive a really strong performance, maybe even pushing the price into the $100,000 to $175,000 range. But then, on the other side, you have analysts like Neil Patel from The Motley Fool, and they're pretty skeptical. He basically argues that the market is just so big now that another one of those crazy exponential gains is, well, mathematically unlikely. It would push Bitcoin's total value to absolutely astronomical levels. So the 2024 halving has come and gone. The code has done its thing. But the real impact of this event, especially now in this new era of big money adoption, well, that's a story that is only just beginning to unfold.
The patterns of the past can give us a map, but they don't exactly draw the destination. You know what they say, history doesn't repeat, but it often rhymes. The next chapter begins in 2025.